All right. So, welcome everybody. It looks like we have a good, yes, we are on the record. Looks like we have a good turnout here so far. Thanks for coming, everyone. My name is Chris, and I run LazyFA.com and hang out in the Discord chat here. We've been doing these weekly chats now for the last few weeks, and we're just using them to sort of talk about the market and make plans for what we're going to do for the rest of the week and talk about various tools and strategies and stuff that everybody's using in order to hopefully make money. So that's where we are right now. Tonight for this chat, I wanted to share with you some of the ways that we can use automated tools, in particular an automated tool that I made myself because I needed to use it, in order to speed up our research process. And what I mean by that is speeding up the fundamental analysis process, so the fundamental research process. It's really easy, generally speaking, to run some scans for charts that have specific patterns on them, and look at some charts and make a watch list and then day trade them. And you could do that every night in 30-45 minutes. But when it comes to fundamental analysis, some of these companies, they have like 200-page long annual reports, and if you're trying to compile 15 years worth of data and try to make an informed investment decision, it's going to take you a long time to analyze all that data. And then you end up putting it into Excel spreadsheets and cash flow models and all kinds of stuff. And all of that analysis, at least the financial portion of it, is mostly just mathematics, which means a computer can do it. So for those of you that don't know me, my background is in technology, and I was a systems engineer for a while, and now I'm sort of a pseudo software developer, pseudo trader combination. And I built this website a while ago. Over the last couple of years, really, I built it because when I was trading full time, I found that when I would trade biotech stocks, which I spent a long time doing, short selling biotech stocks, and biotechs can be really risky to short sell because you never really know if a company announces that they had positive clinical trial results or something like that, and the thing shoots off 150% in one day. If you don't know anything about the company and you just immediately go, oh, it's up 150%, it needs to come back down, and you short sell it, and you're wrong, you can end up blowing up your account and potentially even going into debt. So that's not a good situation to be in. And so I spent a while short selling biotech stocks back in 2013, 2014. And one of the things I found was that like early in the morning, you wake up and you look at the gappers and you see that stock XYZ is up 150%. And you've only got like an hour and a half to find out if the thing is a complete bag of turds that makes no money and has a drug that will never be successful, or if they're a diamond in the rough and short selling it might actually be a terrible idea. So I needed a way to quickly get a bird's eye view of what the companies looked like from a financial standpoint, whether they had enough cash on hand, how much debt they had, whether they were pre-revenue or were generating revenue already. And so originally this whole thing just kind of started out as a little command line script that it would just go out and scrape revenue and costs and net income and cash flow off of like Yahoo Finance and give me a few years of data. I just put in the ticker and go, okay, this company has tons of debt, no cash, and they're never going anywhere. It's easy for me to justify short selling it when it's up 300% before the market opens. On the other hand, if the company actually looked like they were stable and they probably didn't need to raise additional capital by diluting the stock soon after it takes off, then it's maybe not such a good idea to short sell it. So over the years, LazyFA turned from a little command line script into a whole bunch of command line scripts into a web application, and now it's this. So what I'm going to do is I picked one of these free stocks. And basically what happens is every single day these things update, and it gives you 15 different stocks that you can use the entire site on for, just by having a free account, and you have access to basically everything for those ones. And there's something like 5,500 of these that it randomly kind of rotates between. And so I picked one that is a biotech, which is this Gritstone Oncology. And we have, possibly, I don't know if he's in here, but we have one of our Discord members just made a bunch of money on AUPH, which is what? Arena Pharmaceuticals. And he is very knowledgeable in biotech analysis, and he's a common poster in here in the chat room, and he was supposed to be coming in to hopefully look over our analysis and put in his 2 cents as well. So if you're in here, yes, I'm talking about Slightly Communist. So if you do happen to be in here, feel free to listen, critique, share your thoughts, and we'll have an open discussion about this. Yeah, get in here, homie. All right. So I hadn't looked at this company before today. I literally I picked it because it was one of the free ones, and of course it looks like this just updated. It's not supposed to do that until midnight, but so that may not be free anymore. So I might have to spontaneously find another one here, but at least we can record this one so that people that are not here will be able to see it later. If you do have an account and you were just trying to follow along, it looks like you may not be able to anymore, because I think the site actually just updated the free tickers while we were talking, which is odd, but we'll ignore that for now. So Gritstone Oncology, they're a clinical stage biotech company. They engage in developing the next generation of cancer immunotherapies to fight multiple cancer types. So it's a biotech company working with cancer immunotherapies. I do not know anything about this company other than what we're going to discover tonight. And that's not a whole lot. But basically what I wanted to do is just share with people how you can use tools like LazyFA and FinViz and some of the other ones out there like Finbox and Simply Wall Street. There's similar sites out there that do this sort of automated analysis, and it can really speed up your research process. So the first thing that I do when I look at a stock like this is just try to get a company snapshot. So I'm just looking for a high level overview of like where they stand. So they have generated average revenue of about $1 million per period over the last 5 quarters and spent approximately $0 per period to do it. So they don't have any costs, at least not on their financial statements. But of course, every company has costs, especially early clinical stage, early stage biotech companies. And we can see that because they generated revenue, but on the bottom line, they've got negative $27.5 million for net income as of the most recent quarter. It's going to be difficult to determine their value in terms of the price to earnings ratio, just because there's no peers for this company. It's a new company that just IPO'd, it looks like in 2018. It is good for short to medium term swing trading, and that's based on the fact that it only trades about 100,000 shares daily, and it only has 19.5 million shares in the float, and a significant number of those are sold short, about 16% short interest. So it does have a moderate likelihood of being pretty volatile for short-term trading, which is probably true of most biotech companies, but especially early stage ones. But that, and then they've got, looks like we have negative operating cash flow and a total debt load of about $21 million. So this means that depending on when their debt is due, it's potential that they may there's potential that they may not be able to service that debt based simply on their cash flow being negative and the fact that they have any debt at all, right? It's difficult to pay your bills when you're not making any cash. So, but this is true of lots of biotech companies. So, it's just an early stage company, and that, just because they have debt and negative cash flow and negative net income doesn't necessarily mean that it's a bad investment. So once I have a snapshot of it, then the next thing that I'll do is take a look at the income statement and the balance sheet and the cash flow statement. Originally, I was going to, I think I have it bookmarked here. I was originally going to go through 4 different points in this chat, but I think we're only going to have time for one of them. So I'm going to split off these other 3 into other chats, and maybe we can continue analyzing this same chart or this same stock. But the one that I want to focus on is how to quickly identify the cause of significant fundamental changes. Sometimes these things are buried or intentionally hidden in the SEC filings. And what I mean by that is when we look at a company and we look at their quarterly revenue, it just kind of popped up out of nowhere. So they weren't making any money at all. And then all of a sudden they have $1.09 million worth of revenue, and it kind of shoots off. So this is a big spike that sort of came out of nowhere. And what I want to do when I see a spike like this on the chart is just identify where it's coming from. What's the revenue that they're making? This is more obvious in, I'm going to open up another window here. This is more obvious in other tickers as well. So if we look at, say, let's just look at Apple, for example, because I just know that their debt did this when they started their stock repurchase program. So if we look at total debt load, right, for years and years and years and years, they had very, very little, if any, debt. And then all of a sudden in 2013, their debt starts exploding. And the reason that their debt started exploding was because they were planning to repurchase a bunch of stock, which is actually a good thing. But the fact that we can see this on the chart in about 3 seconds versus having to dig through 500 pages of SEC filings to find it is really nice. So that's what I'm looking for, is to be able to identify what causes those big spikes. So if we go back to Gritstone, and yes, 21 Flagrant, you are correct. It is their first ever quarterly announcement, right? So this is their first earnings. So if we look at quarterly here, what I want to do is actually, if you just click on the first bar, it will actually pop open the SEC filing that's associated with it. So I just want to see like where this revenue is coming from. Are they actually selling stuff, or is it coming from somewhere else? And easiest way to find it is just to open up the 10Q, and we can either directly look at the financial statements, or we can just do a Control F for revenue. And we're not particularly interested in deferred revenue right now. We're trying to find this 96K in 2018, 9/30. So the third quarter of 2018. And it looks like the 3 months ended September 30th. It's right here. So this is a $96,000 that we're talking about. And it says that it's collaboration revenue. So what does that mean? I don't know what that means. So just going to Control F and find collaboration revenue. And so the company recognized 100K as collaboration revenue as a result of satisfying its performance obligation by transferring the promised services estimated by the labor cost incurred. Labor cost incurred for what? Let's keep looking. I'm on the second result here, so let's back up. Collaboration revenue. Here we go. So to date, we have not generated any revenue from product sales and do not expect to generate any revenue from product sales for the foreseeable future. So that's significant. We want to keep that in mind. For the 3 and 9 months ended September 30th, we recognized $0.1 million of collab revenue from the Bluebird collaboration agreement. I'm guessing this is Bluebird Biotech, which is another biotech company. So let's do a find for Bluebird. And if we can't find it in here, then we'll actually look up Blue and see if there's some information in those filings about it. Basically, I just want to know, they're not selling stuff. So what is this collaboration that they have with Bluebird? Jared Kushner says that they partnered. So yeah, let's look at that. I'm just going to go, rather than dig through this to find it, I'm just going to go here and look up blue. And we will find, just going to find the same quarter. So that was the 2018 9/30 quarter. So let's pull up this, and then we'll go the other way around. Rather than searching for Bluebird in Gritstone's 10Q, we're going to search for Gritstone in Bluebird's 10Q. So here we go. On August 20th, the company entered into a license and collaboration agreement with Gritstone Oncology to utilize Gritstone's proprietary proprietary technology platform to identify and validate tumor-specific targets and provide TCRs directed to selected targets for use in the company's gene therapy products. Okay, so the company paid Gritstone a non-refundable upfront payment of $20 million, which is inclusive of Gritstone's costs to perform activities allocated to it. Okay, so that's fine. Company may also make, depending on the resulting product, payments of up to $129 million per therapy product and $27.5 million per target product for development, regulatory, and commercial milestones, as well as low single-digit tiered royalty payments based on annual net sales. All right, so basically, looks like Bluebird paid them $20 million to be able to use their proprietary technology platform to provide TCRs, which I think are T-cell receptors. I'm not a medical doctor, so don't quote me on that, but I believe those are T-cell receptors. And they're going to develop these tumor-specific targets and provide those TCRs directed at them for Bluebird's gene therapy products. So they've got the potential to rake in a bunch of money, $129 million per therapy product, plus $27.5 million per target product, as well as royalties. So that's nice. So then if we look back at GRTS, T-cell receptors, yes. Random John says, partner with a big pharma till they sell the company or get their product approved for marketing. Yeah, I mean, that probably is exactly what they're doing, which is, I mean, is that a bad decision? I don't know. It doesn't seem like a bad idea. If you can get somebody else to pay for all your research, then why not? All right, so the question is here, so they've recognized almost 1.2 million of revenue in 2018. Their annual report is not out yet for 2019. So they only recognized 1.19 million in 2018, which is the 96K plus this 1.09. And then it looks like they've recognized 1.3, 1.15. So that's what? 2.5 million or so. So 3.5 million. So they've recognized like another 3.5 million so far in 2019. And I'm guessing now that we know that this is basically an upfront payment, it's probably on deferred revenue, which is what we were seeing in this is what we were seeing in this 10Q, in their 10Q, which is, we can go back to the first one. Deferred revenue, current portion, net of current portion. So as of September 30th, 2018, 14.694. I'm going to guess if we put deferred revenue side by side with this revenue that's coming in, they're probably just pulling the deferred revenue out and recognizing it as they spend. So 96,000 and 19.9 million, right? So they have, it was a 20 million upfront payment. They've got 19.9 million in deferred revenue as of 2018, the third quarter, and they've recognized 100K. So there seems to be a missing $4,000, but it's probably a rounding error. So, and actually, it's almost certainly a rounding error because this 19.94 would have rounded down to 19.9. So anyway, that said, my question here is, have they actually sold anything yet? Or are they just recognizing this deferred revenue and that's it? And we can determine that by just looking at the numbers here. So 96,000 and 19.9. So then 19.9 minus 18.81. Let me get out my calculator here. 19.9 minus 1881 is 1.09, which is right there. So they pulled another 1.09 million out of deferred revenue in the fourth quarter. And 1881 minus 1.35 is 17.46. Close enough, 1747. And then minus 1.15, 16.31. So that's that. And then minus 0.984. So yeah, 15.33 million. So yeah, basically, so they got an upfront payment. They're preclinical. They have not done any development really yet. But they're basically just using this deferred revenue that they got from Bluebird in order to fund their operations and do this research, which hopefully will result in these future payments up to 129 million per therapy and then 27.5 million per product plus the royalties. So, I mean, that's good information to have, right? It's very basic right now, but it's a really good demonstration, I think, of how you can use automated tools like this to really speed up your research process. We were able to pull all of that information out of both of these 10 Qs without really even reading them, just by looking at the numbers. And that gives us an advantage in terms of the speed with which we can analyze things when markets move. You see a stock that's popped up a lot or that, is generating a lot of hype. It's really nice to be able to not have to read. How long is this report? I mean, this is a 10Q for Gritstone, and it is 75 pages long, 74 pages long. So, I mean, I don't know about you guys, but I don't have time when I'm trying to make a decision to pause and read a 75-page report. I need to break down the information and get what's important out of it. So let's leave it at that for right now. And in the future, in the next few chats, we kind of talked about analyzing financial statements in this one, but there's also a lot of other features on LazyFA that I use fairly regularly, particularly with respect to red flags and manipulation, as well as insiders and institutional holdings. Just to give you a quick example, if we look at Bluebird, this tool will basically highlight in green or red anything that is positive or negative when it looks at the financial statements. So things like negative EPS, negative net income, dilution, outliers in various things like accounts receivable and debt, different growth ratios and accounts payable, accounts receivable to sales ratios, operating cash flow, outliers in operating cash flow. So these things it'll quickly tell you kind of what's going on. And if you wanted to look, let's say, just at these outliers in debt load growth, we can see what they are by going into the balance sheet and let's see what it looks like. So, division by 0. So there's something, it looks like there might be something wonky with the data on this particular company. We'll look at Apple. It's got a lot more data. It'll be easier to demonstrate what these things do. So Apple has outliers in debt load as well. Of course they do, right? Because, we want a bar chart. So they had very little debt up until 2012 or 2013, and then all of a sudden, they pile on this debt. So LazyFA basically picks that up and says this is 53.7 times the normal amount of debt that they've had over the entire data range. and it will alert you and tell you that that's an outlier, and you might want to look into what's causing it. So a lot of the time, the way that I find these outliers and these big spikes in things like revenue and cash flow and debt, and catch things that show up in accounts receivable and stuff like that, is by looking at these red flags and identifying outliers. And then I can just click on the bar, open up the filing, and dig through it to find the relevant information which caused that discrepancy. So I use that really often. A lot of times after reading the company snapshot, I just go right to the red flags and look at, what is, and I just quickly look at what the outliers are and any of the flags that are triggered. And that way I know sort of where to target my research. So, cool. 900 million on average to bring a drug from development to FDA approval. Yeah. Jared, that is a really good point. If it costs 900 million bucks on average to bring a drug from development to FDA approval, they are very, very early, and they're not going to get by with just 20 million bucks. They're going to burn through this. They're going to probably need to raise capital by diluting the stock. They're going to have to get other contracts and other partners. But you're right. They wouldn't have gotten a partner if it wasn't promising. I don't know that much about Bluebird either, but I believe that they have made other acquisitions in the past. And let's just quickly look at, are we on Bluebird here? That's GRTS. I really need to put the ticker in the top of this thing so I can remember what company I'm looking at. How big is Bluebird? Let's look at market cap. So it's a pretty big company. I mean, relative to Gritstone. How big is Gritstone? Not GRIT. GRTS. Gritstone, on the other hand, is much smaller. There are faster ways, by the way, to find out how big a company is, what their market cap is. Don't know why that is not working. Go back to the metrics. And okay, so we're talking about a $450 million company versus a $5.5 billion company. So Bluebird is significantly larger. They've got money. How much cash do they have? I need to go back to the dashboard. I think the site is laggy right now because I'm streaming as well. So Bluebird's got 150 million in debt and about 400 million in cash. Recent quarter, about 300 million. So they've got cash. They have manageable debt. Do they have revenue and income? Yeah, the site is very laggy right now because of the streaming for whatever reason. Okay. It's a little bit of revenue. Oof. Net income doesn't look good. EPS is not looking good. So, I mean, I would want to know more about Bluebird as the funders of this project. And have they made other acquisitions in the past? Have they been successful? And so on and so forth. So anyway, automated tools to help speed up your research process. Questions, comments, concerns? What do you guys think? Do we buy Gritstone tomorrow? Or we send Slightly Communist to buy 1,000 calls and watch him make 100 grand overnight? Cool. All right. Well, let's leave it at that. I'm going to stop the stream portion at least. And if you guys have questions, drop them into the live chat channel. And I'll do my best to answer them. Johnny wants to know, what site or app do you use for day trading? If I'm going to day trade, I use Tastyworks. It depends on what you're trading. If I'm going to trade options, I'll use Tastyworks. I would not use something like Robinhood for day trading. I also wouldn't use something like Thinkorswim, just because Thinkorswim tends to have a lot of problems in terms of market data, and whenever the market gets moving quickly, it always chokes. One of the best platforms that I've ever used is Dash Trader, and that's through Speed Trader Pro. I believe Interactive Brokers can use it. I believe Centerpoint Securities can use Dash Trader. Dash Trader is the bomb if you're day trading. If you are swing trading or trading options, Tastyworks is a little more stable than Thinkorswim, even though it's way less featureful. So what I usually do is, if I'm trading options, I will use Tastyworks to actually make the trades, but I use Thinkorswim for the analysis portion of it. I don't know, Johnny, if you can use Tastyworks in Canada. I would suspect that you can, because I'm pretty sure that it's the same guy that developed Thinkorswim. Miles, it's DAS, D-A-S, stands for Direct Access Software. Yeah, Tastyworks is basically like a stripped down version of Thinkorswim. This is Tastyworks. So you definitely don't have all of the, fancy features that Thinkorswim has, but it has the basics. You've got your options chain. You can buy and short stock or options. It's got some pre-built complex strategies like vertical spreads and iron condors and things like that. So I like it. I mean, it's simple, it's easy to use, and it works well. They've got decent fills. The commissions are good. So yeah. Cool. Questions? Any other questions? What does that say? $8 price, nothing close to phase 3. Too much speculation. Jared, I'm not sure who you're talking to. Are you talking to me? Yeah, I agree with you. This is way too speculative for me. I would never buy this thing right now. I need to do way more research. But it at least gives us a good understanding of like what the connection is between Bluebird Biotech and Gritstone, and how much further Gritstone really has to go before they can ever potentially make any money. I suspect that if it goes well for this first $20 million, then Bluebird will cough up some more cash and continue funding them until it works. And if it doesn't, then Bluebird will probably lose all their money and Gritstone will go bankrupt. Yes. Random John says it takes a special kind of crazy to invest in biotech. Yeah, I agree with you. It's tough to invest in biotech, especially if you're actually investing. When I was trading biotechs, primarily I was short selling and I was day trading. So, I was in and out in one day. I'd find a stock that popped up 150%. And if it was a turd, then I would short sell it and wait for it to fizzle for the whole day. And then I would get out. So I never traded through clinical trial results. I didn't do any of that crazy stuff, trading options and holding them through clinical trials, because I just don't know enough about biotech. And it's always a gamble when you're trading on potential news and stuff like that, unless you really know like the science behind the drug and what the market is like for it. So if you want to dedicate your life to learning about biotechs, there is potential to make incredible amounts of money, but it's a full-time job and you pretty much would just be trading biotechs. All right. Well, good, guys. Thanks for pit stopping. The next time we do this, maybe we can identify some companies that have triggered some of the red flags and dig into why they were triggered. And also, maybe we can find some that have triggered some of the earnings manipulation stuff. I have a manipulation monitor also, which uses some fraud detection algorithms and stuff like that. This is a lot of research went into this. And it's definitely not perfect, but it does find some interesting stuff. And it uses just, for the most part, it's basic accounting, generally accepted accounting principles to identify abnormalities. And it's fairly accurate, even though it needs a good amount of data in order to identify stuff like that. So it's not going to work on a company that has only 3 years of financial data. But if you've got a company that's got 15 or 10 years of data, and it can look at a large amount of stuff in order to identify averages and anomalies in the data, then it's pretty interesting, the stuff that it comes up with. So maybe we can dig into that next time as well. But not sure, Jared. Maybe we can maybe we can just keep digging into the same one. I'll do some research on it over the course of the week, and then we can look at some more details about Gritstone and also about Bluebird. Maybe we can just keep digging into the same company, and who knows, maybe we found a diamond in the rough. But we'll find out. Bristol Myers Squibb is partnering in their other drugs in the pipeline. Cool. All right. Well, either way, we will definitely be back next week. I want to try to get, let's see, so it's the 4th, 11th, and 18th. We should be able to get 2 more in. Obviously, I won't be doing a live chat on Christmas Day, even though I would very much love to give you all a Christmas present, and I would love to have your presents as my Christmas gift. But I'm not going to be presenting on Christmas. So we should get 2 more in, and then the next one will be probably the week after the 1st. So the 25th and the 1st, we won't do one, but then after that, we'll be into the new year, and I'm going to really try to get it to every single week to have, more content for us to dig into. So that's that. Thanks for tuning in. If you have any questions, feel free to drop me a line, or if you want to email me about LazyFA or with other questions, it's chris@lazyfa.com, or just ping me in the chat room here. So thanks for hanging out. We'll talk to you soon.